He's doing well. I feel like I should be doing a little dance for Target or something. It just cracks me up. What cracks me up more than anything else is how much everybody else hated it, which is part of what I like. So forgive me if I'm gloating a bit today after their earnings and that they're reacting pretty well. Um, anyway, before we even get into the live, if as always, none of the information that I talk about in these things is financial advice. Please, you shouldn't be listening to me. I am not a professional financial advisor. I do this for entertainment purposes only. It gives me a platform to kind of just get my thoughts out there and chat. I hope you guys enjoy it and get the entertainment value. But please make any financial decisions and do your own research yourself. Maybe reach out to a financial planner. Hello, Lily. Glad you could make it. I hope everybody is having as good a day as me. I actually would have liked to do the live outdoor because the weather here in Vegas is just so incredible lately, which is awesome. I mean, I love this time of year. I grew up in New York and then I lived in Chicago, and it's kind of funny to me. Like, I was that kid who used to walk around in shorts in the middle of winter, and now I get cold in like 50 and 60-degree weather, which really isn't all that cold, but you adjust to where you live. So, anyway, I will talk about Target's earnings today. If anybody has questions at any point, just kind of chime in and let me know what you're curious about. I also want to talk about the housing market a little bit because I don't know if it's just my algorithm, but I get more and more pop-ups for these doom and gloom housing market videos. And I think you guys know, like, I'm not really doom and gloom about much of anything in the markets. I think the markets are doing okay. And I'd also be willing to go over my dividend payouts for February if anybody's curious. Before I started the live, I kind of wrote them down just so that I had them because as I'm doing a dividend rotation, which is this new channel, I know that some of you are more interested in dividend stocks than just the markets in general. I can't help but be me, and I kind of look at all of it. I am not in any big hurry because I still think that, like, the growth stocks that I'm in, like, honestly, I think the sell off in the software stuff over the AI stuff is totally overdone. Um, I think that fear has just gone through the roof. And I think it's just gone too far. Now, that being said, I am not trying to catch any of the falling knives at this point. I started dipping my toe in a little bit, probably a little bit early, and I'm still comfortable with the purchases. And again, I think there's huge opportunity there. I just, I don't know. I don't want to get caught on any of it if it keeps going. That being said, I love the price action yesterday. I've been really amazed by the price action today. I was a little surprised to see it bounce as much as it did, but seems super bullish, and it's hard to argue with what's going on. Like, markets are markets and they go where they go, and you just have to kind of be along for the ride. Um, I don't know if I can see Lily's curious about my thoughts on Target, so I will get into that. Um, And I should do a little like Target dance or something. It just cracks me up. I don't know now. Now, forgive me, like, Lily. I don't know that I would be buying it at this point. It makes it hard. Like, I think it's probably closer to fair value. Where I have fair value in my mind on Target is 130. And last I saw, let me double check. I know it was above 120, which was great. Yeah, I'm seeing it 121.67 as of a few seconds ago. Which, don't get me wrong, that's still a little bit lower than my target price, but it's no longer where I saw it as like a huge value. I still think it's a good value. What I like about Target is they pay a decent dividend. It was much better when the stock was trading, $80 a share or so. Um, but they use, like, if I remember correctly, and forgive me if I'm off a little bit, I think it's 57% of their free cash flow to be able to pay what's now a little bit under 4% dividend, so it's still decent, but it was above 5%, and I just think that's an incredible opportunity. And let me go over the earnings real quick. I kind of pulled that up too because it was something I wanted to talk about. So I'm glad that you asked. Um, so they reported fiscal quarter four 2025 adjusted earnings per share of 244 a share, beating the estimate of 216 to 217. So they really crushed it. Revenues were down a little bit, but a tiny bit. But to be fair, they closed a bunch of stores over a little while, so that's not a big surprise. Same store sales declined to about 2.5% overall, but they must have crushed it in some, and they must have had better margins that were expected. I'm also wondering if they're going to be one of the companies that might benefit from the ruling against the tariffs, which I think is so stupid. I don't know what you guys think. I think it's funny they put these tariffs in. Companies raised prices because of it, so things were more expensive. Then the Supreme Court rules them illegal and that it has to go to Congress and everything else if they wanted to pass some of them illegal. And what ends up happening is the companies will get a refund on the tariffs they paid, but the customers aren't. Like, if you bought overpriced goods because companies raise prices for the tariffs, why would the company get paid? Anyway, that's just my own soapbox rant. I think it's kind of funny and silly. I don't know if Target will be one of the benefactors. If they are, that should help the stock as well. But more importantly, for next year, fiscal 2026 outlook, Target projects net sales growth of approximately 2% for 2026 and full year earnings of 750 to 850 per share. And I know that doesn't sound like a lot. Thank you, Lacroix. Very kind of you. But they were expecting to have a drop off next year. So they went from having a drop off to expecting to do a little bit better. And I know it's only 2%, which doesn't sound that incredible, but they put a new CEO in. Everybody was disappointed because they feel like he's been in the business. He worked for Target previously. So they felt like no new blood, nobody who's going to change much. And here in his first or second quarter, you already see improvement and projected improvement going forward. So that's why the stock is reacting so positively. I don't like from my standpoint, when it reacts like that, sometimes you have a pullback, but I've also watched other stocks like Hershey's that just kind of went straight up once people started feeling better about the company. So that could happen with Target as well. If you own it, I don't think I'd be selling it because, at least for me personally, I was happy to buy it and get the dividend. It's nice to see when the price goes up, and it's nice to see something that, like, I don't know how long you've been watching the videos, but maybe a year ago or 6 months ago, it was one that I used to joke and be like, I'm banging my hands on the table because I saw it as such a bargain. It's not like I don't really care when I buy a stock for a dividend. Ego wise, like, sure, it's nice to see the price go up, but I really just want to make sure I get the dividend, and that's cool by me, whether it goes up, down, sits flat. I worry that the dividend's in jeopardy if a stock starts falling too far. Um, Hi, Quinn Leanne. Hope you're doing well. But in general, I don't, other than worrying about the dividend potentially, I don't really care. So their guidance was good. Quarter one earnings per share is expected to be flat, slightly higher than last year. Again, I know this stuff doesn't sound great, but it's better than what was expected. And the fact that it went from being like they were expecting to do worse next year and this year, and now they're expecting to do better, I think that's huge. So you have a company in the retail space when the news is about tariffs and inflation and margins being squeezed and things not going well, and here they are doing okay. And so did Best Buy, by the way, which was had a nice beat as well. Stock movement targets share rose today in pre-market because this is a little bit before. Investor views and analysts note the earnings beat and positive guidance are encouraging, and then they worry about other stuff, which is fair. Beat on earnings, but mixed sales performance, strategic pivot. So, under new leadership, forward store experience, digital channels, and merchandising strength, he also talked about doing. Sorry, my eyesight's getting better. Wally, hello, Wally. Hope you're doing well. Um, he also noted about redesigning some of the school stores and updating them, which I think is a great idea because what I'm really hoping to see with Target is a transformation back to that Target that people used to call, because people used to love Target and talk about what a great deal it was, that it was a better experience than being at Walmart, but prices were pretty much the same. I think it's kind of changed a bit where the prices are a little bit more at Target, but I still think it's a better experience. Like if you put them side by side and I had to pick which one to walk in, I'm for sure walking into Target. The other thing that I liked about it is when all the bad news was out, like the lines were really good. And I've talked about that a little bit in some of the other videos about Starbucks as well. There's a couple things that I really love about Starbucks. And look, while I talk about the numbers in a lot of the videos, sometimes I pseudo ignore them because the people who run the companies can hide whatever they want in the books. On top of that, you can't predict the future and you just don't know what you don't know. Like, I know that sounds stupid, but you have to stick, at least in my opinion, not you have to, with good name companies that you've known a long time that tend to do just fine in ups and downs. Now, what I started to say about Starbucks that I really loved, any Starbucks I seem to drive past seems quite busy. They seem to do just fine, despite that their free cash flow is struggling to pay out the dividend, despite that they were struggling in China. But as far as I remember, they sold a large percentage of that division off. But the other thing that I really loved about Starbucks was watching all the guys on YouTube who had owned it for years finally getting frustrated and given up and talking about how they rotated out of it. Look, my attitude when I buy a stock like Starbucks is I plan to own it for 10 or 20 years. Unless something changes about Starbucks, meaning I no longer believe in the company, not the stuff that's in the news. That doesn't mean that their margins are squeezed or they picked, I think they picked a side in one of the wars or something and people were protesting. Like all of that stuff fades over time. I mean, I don't know how many of you remember, but Chipotle had all sorts of problems that they were going through. And then the stock like took off once people forget. People's are like we're really short term and we were created that way on purpose to be able to live our lives and not worry about like when people we love die or when bad things happen so that we just continue, which is a little bit why we forget about the negative on companies. Like even Boeing, that was only a year or two ago, and another one I was like banging my hands on. I don't know how many people remember the planes falling out of the sky and that nobody was going to fly there, 737, I think it was. And I'm just not getting on. Dude, people are getting on planes. They don't even think about it anymore. Maybe a tiny percentage do. And similar with Target and similar with Starbucks. Nobody's paying attention to that stuff and nobody's concerned. In the meantime, once everybody on YouTube had finally had enough, well, the stock price is drifting higher. And I even saw a YouTube short recently where somebody was talking about it's going to be one of the most likely that they cut the dividend. I have two things to say about that. It's pretty rare that a stock price is drifting higher when a stock needs to cut the dividend. It seems like the people with real money that control billions of dollars tend to have a better feel for what's going on or a better gauge with companies. So they tend to drift higher or lower, and then the news comes out. I don't want to say that there's insider trading or accuse anybody that I have no data on, but it's amazing how that seems to be happening. And Starbucks has been drifting higher, not lower. The other thing is, even if they cut the dividend, in the long run, if you're holding it for 10 or 20 years, Who really cares? What's the difference? It really isn't a major deal. And, maybe this is a good opportunity to talk about the McDonald's trade that I always yap about. Because, so I bought McDonald's I graduated high school in 1990, so it was 1988. It was a mix, and I'll do a short version of it, but it was a mix of four different stocks that I bought, or five total. There were four others that I bought. The point was, I can't remember one of them. Three of the four went out of business. It was Eastman Kodak, Chrysler, and GE, which is different than the GE that they quote on the screen. And I'm not sure if would have gotten some shares, but I don't own those anymore. I do still own some of the McDonald's. But the McDonald's alone split three times, and I bought 100 shares somewhere around $22 or $24 a share, which is where it was trading. I was getting a $6 dividend at the time. So it split three times. That would mean if I still had all of it, I'd have 800 shares. So I think of McDonald's, since Lily said she likes Starbucks, the same way I kind of think of Starbucks. Like, McDonald's is the best of the best for the hamburger fast food business. I think Starbucks is the best of the best for, I think they call it energy type drinks, but I think of it as coffee. But they're the best of the best for coffee shops, at least here in the US. Well, since 1988, it's had three splits. So I'd have 800 shares instead of 100 had I kept it, which I didn't keep all of it. And I don't know exactly where it is, but it's around. Let me punch it in so that I'm not wrong and don't misquote. So McDonald's today is $330 a share. So if I had those 800 shares, that would be $264,000 from a $2,300 investment. Now, my point was, first of all, that was over 26, 36, 38 years, so almost 40 years. On top of it, during those 40 years, McDonald's fell in half three or four times. There was mad cow's disease a couple times. There were some other issues. Like, it wasn't all rosy. It just goes up perfectly all the way through. And it was scary. Now, I wish I could go back in time, because me as a kid, every time the stock split, I felt like I got a free extra 100 shares, and I would sell 100 and keep 100. But that's just amazing. And it shows you how compounding over a long time frame in a big, boring company can really pay off. Because in 1988, when I bought the 100 shares of McDonald's, it wasn't some new startup. Like, there were stories about grandparents who put $1,000 in McDonald's when it first went into business, and how they were millionaires. And $1 million in 1988 was a good bit of money. So it really was like a big, boring company that I would compare to Starbucks of today, or any company you think of. Like, I think of it as like Amazon, Google, Meta, like well established, good companies with a good name. I didn't do the research when I was 17 years old. I just wanted to invest, and McDonald's was something I knew about, and I thought they were a good company. So, big, boring companies over 38 years that still might fall in half from time to time or more if you just own them. Like my teenagers, kids' friends, they all go to Starbucks. Like, that's the stuff I look for, because that's what gives longevity. If the kids are going there, that means they will continue to go there when they're an adult. The brand continues to be built. And even if the stock drops in half, even if they cut the dividend, if you are buying a company like Starbucks, think long and hard before you buy it, and then just own it as an investor. Don't worry about anything else. And, maybe there are better options out there, but then I would take the time and go into the things you think. And then I've even thought about, for some of the people, like, I did yesterday a video on my biggest losers. I don't know how many of you, if any, were able to see the video, but I did it on purpose because I wanted to show all these people on YouTube who sit there and talk about, I double my money every year or make trillions of dollars, that it, they're probably selling BS. And I can't prove it. I can't, but I'll call them out to some degree because I'm guessing they can't document it. And as long as your overall account is doing just fine and keeping up with the markets or doing whatever you'd like it to do, what's the difference if a couple of your picks don't do so well? So my metric is, so long as my account is chugging along or moving in the same direction as the overall markets, I don't worry about whatever the losers are, even if they're bad. Like I picked PayPal at terrible timing. They were fledged, like floundering along for years. I finally bought into them a little bit before this previous earnings in like the mid 60s or whatever it was. Then they have their earnings and the stock collapses to 40. Well, okay, but the earnings weren't bad. They're still doing the same things. They're buying back their shares, and now they even implemented a dividend. So maybe they suck. Maybe they end up being taken over and going out of business in time. But it is one position in a position of 30 some odd stocks that doesn't really impact the overall position portfolio. As long as there's a balance and the portfolio is going the correct way, there's just no reason to over obsess about the ones that are going down because you're going to pick some winners and you're going to pick some losers. So a whole long-winded thing to answer about Target and Starbucks and some of the others, which is I plan to own them for a long time. My recommendation for the channel, what I hope to encourage people, is just to invest and save and have a long time horizon. Don't worry about, like, I keep a separate account where I trade and I pay attention to the ups and downs throughout the day, but it is a much smaller percentage, and it's mainly because, my personality and I can't help it so much. Outside of that, the real investments, I plan to leave them for really my wife and son, not so much for me. So let's take a look at. Oh, I did want to talk about real estate for a bit. Like I said, I've been getting these things in my algorithm for all of these doom and gloom real estate people. And similar to my overall thoughts on the stock market, which having a nice rebound today, I'm pretty surprised. But I don't see a big crash in the housing market. So when I see the videos and they're talking about how it's unaffordable and the market has to crash, those are two separate things. I don't disagree that the affordability is pretty stretched. Now, I have a feeling part of that is as you get older and you get used to whatever you're used to in life, as inflation comes around, it's hard for our older brains to adjust to the inflation. I remember one of my friends at the restaurant talking about this. He was older than me, and he was talking about how his siblings couldn't deal with inflation because when they were a kid, a sandwich was 50 cents or a dollar, and now that they're $6 or $8 and now they're even more. He's like, their brains just can't adjust that's what happens with inflation because it just keeps going. So part of me wonders if people who are my age look at the monthly payments and just think, oh my God, how does anybody afford this? But as somebody who does mortgages, what I can tell you is the young people who come into my office, oftentimes it's a husband and wife, and this is not always, this is a total generalization, so take it with a grain of salt. But oftentimes both people are working. One of them is making somewhere around $60,000 to $90,000, and the other one might be making $130,000 or $160,000 a year. So combined, they have a pretty large income coming in. That wasn't the case when I was young and getting out of school and stuff. So I'm amazed how these late 20s to mid 30s have this kind of income coming in. And they're not super uncomfortable with maybe a $4,000 a month payment. Versus when I started in the industry, most of the mortgages I was doing were $1,200 a month, and people had $10 an hour they were making, or 12, and we could qualify them. But these are a lot of people moving from other states who have good jobs, who've been transferred here or work online. And the military, whether it's the hospitals, whatever it is where they're working, I just don't see a big collapse. On top of that, you add most of them have good credit. They're deciding how much they want to put down as opposed to kind of saying, what's the minimum I can put? Like if they're asking that, it's so they can do the analysis of how much money they have, what they want to put down, what the payment is going to be, and what they would do with the money that they don't spend if they put less down. But it's not a forced situation where they don't have enough to make that decision. So the buyers are in good financial position. So you take a bunch of people who have pretty good jobs, good credit, and have some money around in the background buying the homes. What's going to cause it to crash? Like, if you go back to 2008 and think about who was buying the properties and the loans that were available, people weren't getting into 30-year conventional loans who had good income, had steady jobs. And if you've seen The Big Short, you know what I'm talking about. People could just do stated income and stated assets. So they would go in, they would say, I make $1 million a year and I've got $50 million in the bank. And they didn't have to prove any of it. Then they would get this loan that was called the option arm. The reason it was called the option arm is it had 4 different options when you got your bill, including ARMs, which are adjustable rate mortgages. So you would get your bill and you could decide from 4 different options. And I'll go from highest to lowest. Option 1 is the equivalent payment of a 15-year conventional loan or semi-conventional. So that would be the highest payment. Option 2 is the equivalent of a 30-year traditional conventional loan. Option 3 was what was called interest only. And like I said, we went from most expensive to middle. Now we're getting into the cheaper. So interest only means if you bought a house for $400,000 and back then you could do no money down and your loan amount was for $400,000 and you only paid the interest, that part of the loan wouldn't change. You were only paying the interest. And then you even had negative amortized, which means you're paying less than the interest only. You're adding on to that $400,000 principal balance, which sounds really weird that you're able to do that. But these loans were really intended for people who were flipping houses and wanted to keep their payments as low as possible and weren't super concerned if they added a few $1,000s onto their principal while they worked on flipping a home, if that makes sense. So they would get those things in the mail, and then these loans had what was called a seasoning period. Usually it was 5 years. They started in like 2002, 2003, which is why you saw the market correct and collapse in 2007, 2008, and get worse and worse, because after the 5 years, they no longer got 4 different options. The loan would recast and you would have to make your 30-year traditional payment. And if the minimum payment was $700 or $800, which was pretty common because my sister got one of these loans and her minimum payment was $700 or $800, when it recast, eventually she got in the mail a normal mortgage statement, and all of a sudden she couldn't pay $700 or $800 a month, and it went to like $2,800. And she didn't understand it, even though it was explained to her. And it's amazing that it wasn't understood because I remember it being explained from her to me at the time. But 5 years later, people just get the new bill. They get, they get thrown off. They don't understand why they can't make the lower payments. And now you see the prices start to correct. So here you are. You bought a house for $400,000. You put no money down. You started adding onto the principal balance, and I'm making numbers up, so forgive me. And maybe you owe $410,000, $420,000 by the time it recasts. Then the housing market starts to drop. And interest rates haven't done a whole ton, but now your $400,000 home. Hello, how are you, Mikaventika? Forgive me if I pronounced it incorrectly. But let's say the home just fell to 370, like nothing majorly dramatic, but you owe 420 now instead of 400. The house is 370 and your payment went from like 7 or 800 up to 24, 2600. So now you're paying 24 or 2600 on a house that's only worth 370, looking around the corner and going, geez, I could buy a house for that price and have a $1,800 payment or whatever it would have been. Then the housing continues to go lower. People don't want to keep the house because the prices just drop. So you have this big mass exodus of everybody who got those loans wanting to get out. And then they just dumped it on the bank because they were upside down. They didn't want to take the loss. They didn't want to make the higher payments. You fast forward to today, that just isn't the case. Even though foreclosures are going up at a super high percentage rate, if you, uh-oh, why does it do that? Forgive me, are we back? I think we're back. It lost connection for a bit. Um, you fast forward to today and you just don't have that scenario. There's no reason to have the mass exodus. You have high percentage wise foreclosures going up, but at one point it was pretty close to zero because the house prices were going so much. If your house goes from $400,000 to $600,000, why would you foreclose? It's not called foreclosing, it's called selling and taking your profit, even if you can't afford the mortgage payments and you have to sell. Like there weren't any foreclosures. So when the guys on YouTube are quoting these exceptionally high foreclosure rates, keep in mind they're coming from beyond low foreclosure rates. So it's really easy for it to go up 50% year over year. And obviously, I'm making it up. Or whatever the number is that they're going up, that doesn't mean there are actually a lot of foreclosures. And if you want to talk about specific areas, is that you? Oh, Rudolph, I'm glad you made it. Yep. No worries. No worries. Um, but if you want to look at specific areas like Florida, Florida has Florida specific reasons why they've corrected so much. First of all, the insurance has gone through the roof. Then you've had the weather issues the past couple of years. But if you go back a few years and date it to when that high rise fell, for anybody who remembers it, you had one of the high rises fall, and the state put in all these new regulations for requirements of HOAs. And I read a few of the stories that were just horrible, and this is what's impacting their prices. So you watch these doom and gloomers who point to Florida. Well, one of the buildings crashed, and now the HOA needed to have a certain amount of reserves. And I watched one where a guy had bought the condo for about 150,000. The price had drifted up to maybe 230. Like it was again nothing like out of the craziness. But with that collapse and the new regulations, they got hit for an 100,000. You heard that right. $100,000 special assessment on the HOA because they needed to get the reserves to where the state now required them after that big crash. Now, I am sure that was one of the bigger, more exaggerated ones. He ended up selling the property for about $10,000 less than he bought it for after having that nice equity. But even do that smaller where people were getting hit for $30,000 HOAs, their insurance was going through the roof, then they started having a few years of bad weather. And I think people just were flying into Florida because it's a great place to live and then questioning, is that really where they wanted to be because all of these things were happening. And I can confirm it. My brother's mother-in-law saw their insurance double in 1 year, and she's fixed income, so it was significant. It may not look like a large dollar amount to some of us, but I know for her, who has her exact amount that comes in from whether it's pension or social security or whatever, If it's going up $100 or $200 a month, that impacts their lives. So you have to be really cautious when these guys are like talking about real estate, where they're talking about it, and what's going on, because real estate is very local to the real estate market. You come over here to Las Vegas, and I don't really see a major issue. Like transactions are down. I get that, but that doesn't mean like prices are dropping or sellers are panicking. Some guys show these price cuts, but if somebody lists their price too high, which happens all the time, even in a good market, sure, it might sit for a while and they might need to lower their price if they really need to sell. But otherwise, like to me, the real estate, at least here in Las Vegas, seems just fine. I don't really picture it going straight up, but I sure don't see it collapsing either. And I think it'll do what real estate typically does. It'll drift higher, maybe 2% a year. Um, so Rudolph is asking a good question. Is it more hot in Las Vegas or in Florida? And Rudolph, really, that is a great question that I love to be able to answer, because I grew up in New York and I moved to Las Vegas, and I started in the video talking about I was the kid in the shorts in the cold weather. I think you'll be surprised by my answer, Kavanta. Um, I cannot stand 80 degrees and 85% humidity. It's disgusting. The temperature in Las Vegas technically is hotter. But I used to have a renter that would come here in the summer because they couldn't deal with Florida. The humidity is just the worst. And while the temperature might be higher here, it feels so much better. I got no issue. Like until we get above 110, 115, I know it sounds so nuts. It really isn't that bad. And then you add to it, like, I don't know, once you live in the desert, there's some really nice things about the desert. Like, you just don't have all the bugs that you have in the humid regions. You don't have all the critters, all like, I don't know. I really like Vegas. Uh, I feel really fortunate to be here. The only thing that I don't like is I moved here because it was super inexpensive, and that's really changed a lot. But I think it's changed a lot. Part of me targeted Vegas because we had a lot to offer and it was really inexpensive. I think COVID really sped up people finding some places that were nice to live. That oftentimes people think of them as vacation places. Montana had a lot of it too, and some other places, but I think they kind of shot up in price because they're really good places to be. And once remote work came around as well, it kind of just sped up the process. Like I think we would have gotten here anyway. Forgive if I'm pronouncing it wrong. It says Mi Kavantika. So I apologize, but it sounds like you come out here for the poker tournaments, which is cool. Like we also have like tons of shows and phenomenal restaurants, and I miss that we don't have like a city. Like I don't think of the Strip as a city. And to be fair, when I grew up in New York, I didn't live in the city. But I think it's so cool that you come out here for the poker tournaments. I don't know which hotels you stay at. um, but Vegas is really a great city, and we're growing and beginning to add family friendly stuff. um, oh, Sam. Okay, okay. I saw that. I saw that before. I didn't realize that's what you were saying your name was. I apologize. Thanks, Sam. And thanks for commenting and asking questions. But they're adding more family friendly stuff as well. And I think as more people come here, there's more demand for a lot of that. And even things like people are really harsh on the school system. But I'll tell you what, we have this magnet system that is part of the public school system. And when we moved here, I heard about how awful the school system was. So we put our son in private school. And then he got accepted to one of the magnet programs, but we were really nervous about transitioning him out because all I hear is, oh, the schools. When I tell you how great the magnet schools are and the program that's offered, like there's a lot of good out here too. Like he gets a great education, and the magnet program. And then when you go into high school, they actually have majors. Like, it's pretty weird. If you want to be a lawyer, they have a specific school that'll help target to that. And the one he's in is like math and science. So they have engineering. They do have a business one too, but they have engineering, biomed, cybersecurity, like all of these things that you actually kind of major in high school to help target you for college. And the teachers, I don't know. I just say it because I've been really surprised about Vegas. Now, we've been here since 2005, so we've been here a little while. And it would be really hard for me to move somewhere else at this point, unless I considered out of the country, which I do talk about, but I run into the same thing. I like the desert weather, and the places I like when I look out of the Vegas are like tropical. So Sam, yeah, we're hotter than Florida, but I would take the hot temperature with the lack of humidity, even over like New York, where it doesn't get anywhere close to Florida. But I love the beach. Like, I'll go visit Florida, like, or California, which is pretty cool. So Rudolph, I've always wanted to ask what those patterns are on the lawn by the pool. Two circle. Somebody else says I have to look. I don't know why it comes up. I don't think it's. I don't know what it is. There must just be a shadow or something, because we don't really have two circles over there. There's a circle chair, and then in the middle there's a little fire pit, but those are big. And you're not the first person to ask about it. I assume you're talking about like in the grass, but I think it's something about the camera angle or something else. There isn't really a couple of circles there. And Sam's agreeing, like, don't you miss New York City? No, no. And I know I try not to get into politics, but I can't. Yeah, that's what I thought, Rudolph. You're not the first one to ask. I really just think it's the camera and the way that the sun shines and everything else. There's nothing in the grass. Um, but I'm so glad I'm not there with Mumdani. I wish them the best. I hope he does a good job. I just have no faith, and we'll see. I really do wish them the best, because I don't want to see anybody go through a bad period because I have an opinion on a politician. Like, I love New York. It is a great city. I've just watched it transform over the years. The last time we went, what's the name of it? There's some pharmacy there that's unique to that area, but everything was like locked up. And now, don't get me wrong, when I was a kid, New York was not the safest place in the world. Like, it was part of the edginess and what you liked and everything else, but it wasn't what it's transitioned to. Like, I'm okay that it had a little edginess and it wasn't the safest, but it wasn't accepting of bad behavior because of that. And look, Eugene Edwards or something, Dwayne Edwards. So the pharmacy out there, Dwayne Edwards, which is kind of like, Walgreens or something else. Um, Boots, if you're in Europe, the whatever Boots Alliance or whatever, where they've got like snacks and some drinks and whatever else, but they also sell medicine and everything there. So, but it's not like a supermarket. And we're in Dwayne Edwards, and we're getting some stuff for the room. And this was not once. I mean, we were only there for like 3 or 4 days, but this was right next door, so we would stop by each night if there was something we wanted. 2 or 3 of the times somebody was stealing something, and every time the cashier was like, excuse me, as they just grabbed whatever they grabbed and walked out the front door. And there was really nothing anybody can do. Not that customers were going to, but they're not allowed to have security, or Dwayne Edwards gets in trouble. The cashier can't really do anything, which is super silly to me. Like, it just makes no sense. And I hate to see it transition like that, as well as all the people who are hopping over the turnstile to go into the subway for free. And just then I go to Asia, that is supposed to not be as nice as America, right? But the subways are clean, people are polite, there's police or security down there so that there's nobody sleeping overnight, or it just makes no sense what New York has turned into. So it is what it is. So what's my view on the epic fury? Interesting question, Rudolph. Like I know I said I'm glad you asked, and so one of my doctors is Iranian, which made it a really interesting. And when Trump first started threatening, his mom still lives there, and so do some siblings, which to me makes him a better expert than me on it. And then I'm sensitive, like, I didn't want to say anything or overstep, and his comments really shocked me. But I'm sure there's people on both sides of the equation, like there is anywhere, and I don't want people to die. Like, I hope that's clear, and I assume we all feel that way. But he essentially said, I sure hope Trump doesn't chicken out now that he's gone in and started talking about getting rid of the regime. This was before the war. And I was really taken aback and thrown off. And basically, he confirmed that they're awful, people are oppressed, that he worries about his mom, and he wants them out of power no matter what it takes. So he hopes that Trump is not just saying words and, like everybody else, doesn't go in and do anything about it. So I really think of the doctor and what he was saying about his family and what he hopes for. So my view is it's an overall good. I do think we get a little bit of a sales pitch about it. My wife's uncle sent something this morning about a little bit about it, and talking about the oil prices going up, because he knows that I'm financial. It wasn't anything else. But what I said is I think it's short term, because it's interesting to me that we went into Venezuela, which has a lot of oil producing, and now we're going into Iran. So I think no matter what the spin is, a little of me thinks that there's also a part that we're going in to try to control oil and energy to make sure that prices stay stable in the long run. I think short run, it could really shoot them up as the canal gets shut down. If it causes a kink in the chain where, it just has to go around, takes longer and costs more money because of the lack of security. But I do think over the long run, part of the goal is, Venezuela produces a ton of oil, Iran produces a ton of oil. I don't think that that's all kind of random. And I used to think the same when we went into Iraq 100 years ago. So I don't have an opinion. Like, I'm not in the know well enough to really, like, know about the politics. But between what the doctor said and the fact that I think it's not a bad thing if we have a better control of oil movements, it's probably a good idea. Um, Look at that 14.5% dividend increase on waste management. I didn't realize that. Let me pull it up. Waste management is such a great, they have such a good moat. Like, it's such a great company. PE might be a little elevated, but if you're buying something for 20 years, uh, people are going to have garbage for a long time, and they've got the business. I don't really see that changing, and all they have to do is raise their prices if they need to. So that's a great dividend increase. What's the current yield? Let me take a quick look. Yeah, and okay, so forgive me, Bullet. For me personally, the only issue is that the dividend yield is only 1.56. But if you're younger and, like, it's much more important that the dividend yield is going up at that pace versus than the starting yield. And they're only using, according to E-Trade, 49% of their free cash flow to pay that. So it's beyond safe. They've got plenty of income. It's such a great company. And if they're raising it at 14%, all you can hope is that just always continues. And like I said, and their net profit margin for is almost 11%. So I like that company. It's not something for me to add, as I'm just more sensitive to a higher yield since I'm getting old, and that's kind of the income is so important. But I think waste management is such a great long term. Like, where does it go wrong? I thought your supreme leader was for Rudolph. Is that what he was saying? Why did he tip his hat so low? His last presidency, he sure was. I mean, he used to talk about how, people die in war, and yeah, but he also promised that the Ukrainian war, which recently had its 4-year anniversary, as well as the war in Gaza, would be over within like 2 weeks of him being in office, which I wish that was the case. It hasn't been the case. I'm pulling up Copart, by the way. I did see your question or your comment. Um, I wish I had more to say about it. The war in Gaza, I have more of a personal opinion about, but war is terrible in general, and innocent people, like, we get caught up in a lot of the government stuff that we have no control over. It's just the whole thing is awful. Look at that, Copart. So let's see. Why is it not showing? Let me put it into, but still I like your Donnie guy. Believe. Oh, the one behind me? Is that it? Is that what you're talking about? My Donnie guy? Sorry. Let me look in ChatGPT, because for some reason it's showing it as no earnings. I wonder if they had a one-time expense or something, so it's not an E-Trade. By the way, anybody who's seen me do this is I love this AI stuff. I'm just beginning to start to get more comfortable with it. I am totally one who typically goes to, oh, okay. Yeah, he is. Yeah, he's an interesting character. I don't have an opinion one way or another. I'm just beginning to get used to the AI. I've been using ChatGPT a little bit instead of just Google. I'm scared to use Claude. I'm not about to let it on my computer because it bothers me how much it can read. So I'm much more comfortable with ChatGPT, where supposedly it erases it afterwards. So, and all I put in is do a stock analysis of Copart, ticker CPRT. And then for some reason I write please. It's kind of funny. I don't think AI cares. Yeah, no AI, no future. I get it. I can go down that rabbit hole. Like, I do worry about how the people who create it estimate there's like a 20% chance that it kills us at some point in one form or another. And I think that's a rather large risk. And by the time military is robots, like, at first I thought how cool, it'll save human lives. But then the problem is, yeah, but they'll just run around with machine guns and destroy people, and they have no feelings. So how do you stop it either? I've used Claude for some project calculation that's more accurate. I think so too, Rudolph. My concern with Claude is it reads everything on your computer. So unless I bought a separate computer and it did, like, when I think it all through, at some point it gets access to your stuff. And there have been things where Claude, like, they get in fights with each other. They can have access to bank accounts. Like, Claude is too ingrained into the systems that I don't really even want to communicate with it. But it really is amazing. I mean, I saw a demonstration where a woman took a zillion just files that she had on her computer, and I mean tons, and just wrote in the Claude, please organize these files for me. And within like 3 minutes of what would have taken like a week or two, it had it in different folders. And then when you open the folder, everything was like it goes in and it read all of her files so that they were like, it was cool. Claude, what it does is really amazing. And it gave me a glimpse of what this stuff is going to do and eventually. So AI, it really is an amazing technology. Um, but I hate to say it scares me at the same time. Um, so let's see. I don't think it's far away. For those of you not reading the comments when I was growing up, because this is the same time as me, RoboCop and Terminators were visions of the future, and I'm still waiting. I'll tell you what. And when we went to China, they already have these police dogs. Now they don't really use them in force, but they run around the park and everybody, it's pretty, it's coming soon for sure. um, so their vehicle auction, that's what I thought. And somebody else, one of the guys I like on YouTube, talked about Copart. Like, I think they're a great company. Let me see. Let me go to take a look at this too. So 52-week low, 33, 52-week high, 63. So I mean, I like that end of it. And I'm going to say, oh, here it's showing a 24 PE ratio. So it's totally reasonable. And I think they have good upside growth and also something else that doesn't have a ton of competition. I like Copart. Before I read into some of the stuff and looked at it, I was opinionated. So I don't know how many of you watch Everything Money, and I find them super entertainment and I like the channel. But I do want to say something about their whatever program it is that they sell, that you plug in your estimated numbers and it tells you the valuation of a stock. It'll give you a low valuation, a high one, and a middle one. First of all, you're basing it on the stuff you put in. It is just a glorified calculator. Yeah, no, AOS. Oh, I'll have to take a look. I'll put AOS in as well. But here's the other thing. He's always looking for things he considers a value. And I started to talk about it in something else, and I want to kind of do a video about it too. Um, I love, by the way, Rudolph, before I get too far ahead of it and yap about this, I love those movies. I even think of The Running Man as well. We obviously grew up around the same time because I feel like all of this stuff is kind of where we're headed towards very soon. And then we'll take a look at AOS, which probably looks like it has a dividend. Smith O Corp, AO Corp. Anyway, so he's always looking for these undervalued stocks, and this is my issue with that. If your portfolio, not this is not financial advice, please, you need to do your own research. But what I have found for myself is if it is 100% the companies that are undervalued, you're going to have the stuff that pretty much lags forever. In some ways, there's a reason it's undervalued. Now, if you have good reason to think it's going to turn around and things are going to improve, then I get it. But if you're always buying the things that are cheap, it's possible that they're cheap because their growth rate isn't that great. And sometimes, if you want to own the things that are the best, you kind of have to accept that you're going to have to overpay for them. But for me, like, look at Meta. Maybe right now I think Meta's a bargain where it's trading. But even if the PE was running up to 30, they're growing at 27 times earnings for a behemoth that it's very hard to grow a big company at that rate. So some of these companies that are the best that they think of as so overpriced, they're probably overpriced for a reason. And oftentimes they stay overpriced for 10 years. So it's why I try not to dig into the financials too much, to accumulate an entire portfolio of total bargains because I would, but what do you think of Ford? I'll take a look, Tom, at Ford for sure. I actually like Ford, and I'll tell you why in a bit. But I'll look at AOS and we'll look at Ford as well. Um, but I don't want a portfolio of 100% bargains. I do want a mix of some of them in there. But I know from experience, if all of my stocks are those sleepers, they tend to stay sleepers. And I don't mind, like, I kind of want to underperform because I'm in a bit of protectionary mode and I do not want to be 100% Amazon, Google, Meta. But I do want a significant portion of my account in Amazon, Google, Meta because I don't want to totally underperform. So let me take a quick look at AOS for Sam, and then Tom will take a look at Ford as well. So I don't know what Smith AO Corp is, so let me take a real quick look at the company. Let me see. Company overview. So AO Smith Corporation applies technology and solutions to products manufactured and marketed worldwide. The company operates through two segments, North America, rest of the world. Both segments manufacture and market a comprehensive line of residential and commercial gas and electric water heaters. Oh, that's a good industry. Boilers, tanks, and water treatment. The company also manufactures for pools and everything else. So it's a good little niche area, and their earnings seem to be steadily increasing, which of course that's a great thing, and a rather low PE. And I'm guessing because not too many people are paying attention. Let's take a look at market cap 10 billion. So they're decent. They're not tiny. This looks like a good one, Sam. I like this company. For me, the starting yield's a little low, but again, that's just me. Like, I wouldn't read into that at all because a lower starting yield is generally a growing company, so it makes sense. Like, I wouldn't. But their PE is great and inventory turnover is pretty good. Let me see what the free. Yeah, and their payout ratio. So they're using less than 36% of their free cash flow to make that dividend payment, which means they're still using money to grow the company, which this looks like, I mean, in the financials, to me, it looks like a super solid company. Let's see if there's any insider activity, just out of curiosity. Yeah, nothing. I like that one, Sam. I mean, not that but I think that looks like a pretty solid company. And then Ford. Yeah, Meta's been a monster. And Amazon, I watched a video where this guy, Chris Camillo, was talking about Amazon. And he had some really great reasons why he saw it as like a stock that could double over the next 3 years. It's like my third or fourth largest position in my main account. And after listening to the video, he made such a good argument. I bought it in my trading account for a really sizable trade for me, I plan to hold it for the next couple of years, at least I hope to, just because, his main discussion was the autonomous and automation, is that the right word, of things, and how Amazon is going to be able to really take advantage of it, eliminating tons of jobs, saving tons of money. And I think he's probably right. He saw the risk as being somebody like ChatGPT or one of the other AIs being able to compete and sell direct. But I think that's also why they're partnering with them. So Tom, I like Ford, but let me take a look and remind myself why. Oh, I know why. I don't disagree. Like, it's such a bore. Like, why would anybody buy Ford? What I like about Ford is they recently partnered with the Chinese companies to do electric vehicles. And as somebody who's been to China 3 times in the last 2 years, I think that's right. When I tell you that their vehicles destroy ours, their vehicles destroy, like there is no comparison. I, I was walking like, you know how some malls have tiny little auto dealerships that have a couple of cars. We were walking through one of the malls, and I see all the electric vehicles on the street. First of all, I would estimate 60 or 70% of the cars on the street are electric. But I go into one of the dealerships in the mall and there's a minivan. And when I tell you, like, I am not a minivan type of guy, this thing was so friggin' cool. The driver's seat looked unbelievable comfortable. So did the passenger seat. And then the seats in the back were four like captain's chairs that could rotate 360, that had a table in the middle. Like, the things that they do, and they're all like massage heated, cooled, with all the technology, that it's like mind boggling. And I like, they're guys who do videos on the cars. Their stuff is so far advanced. I thought it was such a great idea that Ford is partnering with them, because I think part of the reasons we don't allow them into the country, even within 100% tariff, is because there's a concern that they'll put our car companies out of business. So if Ford's able to partner and do some of these vehicles but sell them as a Ford, I think that creates a really good opportunity to maybe have some better products and actually grow business a bit. Outside of that, I mean, I get your hesitation, like how boring. What attracts me is a 4.5% dividend as well, that I think is pretty sustainable. But man, Ford's done nothing for 10 or 20 years, so I get why you ask it the way you asked it. If you're attracted to a dividend and you don't mind if the stock just sits there a long time, I don't really see anything wrong with Ford. And I love the potential of what's going on with China. And let me just take a real quick look. I'm curious if there's any, yeah, there's insider buying for so, I mean, I don't think it's a huge purchase for him. No, it's not nothing either, but Ford Clay Jr. Um, actually bought a bunch of shares recently. Spent almost $2 million. I love when guys. So did Thornton John L. or John Thornton. I love seeing when people on the board are actually buying shares. I mean, I think most of them have a tendency, even if it's every quarter or twice a year, whatever they do, to consistently sell shares. I don't think people on the board are buying more stock unless they really think it's a good value. So seeing a couple guys buy it is really, I love seeing that stuff. But let me take a look real quick at some of this other stuff. A little bit high of a short interest, so that makes me wonder. Let me see what ChatGPT says too. And then we'll call it a day. Because I'm guessing they took a one-time expense, because it's not showing their payout ratio. Because they show a negative earnings, but you shouldn't read into that too much, because maybe they had some debt that I think they had to take that loss on the EVs that they did, and that's why it's showing that way. So Ford Blue traditional, I mean, I know that I really like that Lightning. The sales sucked, and I think they announced that they're canceling it. But I like EVs. I know some people don't, but we're 100% electric vehicle at this point. And when I say that, like, once you have one and you never have to go to a gas station, you never have to get an oil change, like, it's amazing. It's like plug and play. It's so silly. Forward PE of 10. Yeah, I mean, they always have a low PE. I just don't know the growth. Like I said, I really like that they're partnering with China. I think for me, that's the most attractive thing. Otherwise, I wouldn't be interested at all. And I've thought about buying it as well for that reason. Like, if I can get a 4.5% yield with feeling like I have a potential option that it gets lucky and does well with the partnership, I don't think that's so bad. but I'm not about to plug a huge percentage of my portfolio into Ford, but I was looking at them too. So I understand, like, and I never would have thought to buy them. Um, Long-term value focus, short-term caution, um, suitable for value or dividend yield oriented portfolios with a tolerance for cyclical auto sector risk. So that's the warning they give. So anyway, guys, thanks for stopping in. I'm really glad you made it. I will do my best to do it again next week, and I'm really excited that we're already at 70 subscribers on the channel, and cool. Thanks, guys. I'll talk to you soon. Bye bye.